The credit market is flashing red. We got some MMRI analysis. That's the Mannarino Market Risk Indicator. This is something you're not going to want to ignore. The credit markets are flashing a warning sign that most retail traders are completely ignoring. Today, we're breaking down the MMRI analysis, a metric that's currently sitting at a crucial resistance level. If this breaks out, we aren't just looking at a correction, we're looking at a potential credit market collapse. Stick around until the end of this video where I'll provide the final analysis on the MMRI that will determine exactly what the next move in this market will be. The great rotation is accelerating, and you cannot afford to be on the wrong side of this trade. So with that said, I'll get into this video, and I want to get into the 10-year yield. Um, And let's get this started, guys. Happy Sunday. This is Sunday, March 29th, and this is going to be a good video. But anyway, let's start with the 10-year yield. So the 10-year yield is this is the fourth week in a row of this uptrend. You can see here and zoom out again. Well, of course, like I mentioned before, we're in this downward trending channel. We were trading in another downward channel within a pennant. On the weekly chart, we broke out of that key level. The last levels from last week to watch were the 4.3 level for support and 4.5 as resistance. So we can see right now we gapped up on the open and now we're coming down. Um, so this week I expect to find some support along the what was previously resistance. I want to see what happens, but interest rates going higher, as you guys know, that is bad for the stock market, bad for crypto, bad for anyone that wants to buy a home, as interest rates are going to go higher. Bonds rally inversely correlated to interest rates. So important thing to watch this week for sure. If this goes lower, expect pain in the markets. Expect pain in the markets. It's nothing we want to see, but we have to keep our eyes on it. The next thing I'm going to look at is the DXY. This is the relative strength of the dollar versus other currencies. As you can see, over the past few weeks, we have been in an uptrend pretty much at the start, since the start of this war. We have been in an uptrend. So we are in this bullish channel right now at the moment. I'll zoom in on the daily chart. Each one of these candles is a day. So we've been in this channel since January 27th. We've been pushing up. We pushed to the top, and then last week specifically, we're pushing into this downward trend channel within the upward trend channel. I'm going to zoom in a little bit on the 4-hour chart, get a better eye of what's going on here. I know sometimes on the zoomed out charts it can be a little hard to see what's going on, so I like to move into the lower time frames to get an idea of what's going on. So last week we broke out of this downward bull flag formation. I personally thought we were going to break through the bottom of this channel, but we found support and we broke through, and now we broke through the top of this channel. So we found some resistance at the 103 level. And if we break and go further, the next upside is the top of this channel, which is if we go straight up, that's 101.6. So it depends on the day. But we are finding some declining volume, meaning the RSI is in a downtrend. So I do expect, as you can see in the RSI, we're in this downward parallel channel, and we broke out of that parallel channel. Maybe these channels need to be adjusted a bit, but we are still within this upward channel. So this should continue to put stress on the markets, on the stock markets. And yeah, so the next thing I want to move into is oil, crude oil. Last week was a big week. Last week we closed above a big psychological level of 100. So as oil goes up, this it creates massive inflation and higher prices because a lot of the stuff in this world is made from oil. And we broke above 100 and closed at 100. So right now, everything with regards to the price of oil is going to be determined by what's going on in the Middle East and the Strait of Hormuz and the peace talks or war talks between the United States and Iran. So until there's some resolution, the price can remain um, in an overbought place. But if there's a resolution, then we can find its way coming down. What I'm looking at right now is um, potential support. If I look at the daily chart, the 55 simple moving average is support around 73. So look for the 70s if we do get some peace agreement talks. Now, one thing I did notice is that today we gapped up, but it looks like if you look at the RSI, yes, we did break out of this bearish divergence, meaning that we're making higher highs on the price, but lower highs on the RSI, and the RSI is the relative strength index. So that tells me that this move is losing steam. So, like I said, everything is kind of headline driven right now, but to see this come down, which I wouldn't be surprised to see, because no one wants the price of energy to be higher. Um, then we can see the price of oil come down as we see that right now is losing momentum, but we can still make higher highs. I mean, right now, resistance is going to be at 120, so we can expect some downwards sellers, find some sellers there, and 90 is going to be the support, and 100 is obviously the psychological level. Um, it's very hard to make a guess here on what the price is going to do with oil, so I kind of stay away from that for now because it's very headline driven. But if I were to strictly look at technicals alone, I'd say that we could maybe test 120 high, but I do believe that eventually we will come down and fill this gap. There looks like there's a gap also at 65 um, on crude oil. So all gaps do get filled with enough time. So geopolitical events can extend this time. So we're just gonna have to watch and see. Next, I'll move to gold. So gold had a rough week the last few weeks, but we are finding some support. So this is the weekly chart. We did bounce off the 4,400 level. We got as low as 4,100, which is pretty darn low for gold. But towards the end of the week, you can see we found some support right now. We're range bound between the resistance of 4,650 and support at 4,400. So we're kind of watching and seeing what's going on here. If we see the dollar increase, that could add some pressure to gold. Um, but as of now, we are forming a base, and you could see during that first liquidation back in February or late January, when Kevin Warsh was um, announced to be the new Fed chairman, there was a strong move down. So um, we came right back down to that level and we're finding support there. So that's good for to see in the short term for bulls, but really we want to get back above 4,700 to be back in a bull case. But I personally think we will go higher. It will be only a matter of time, but the downward target, if we do go any lower, is going to be 4,000. So important things to watch this week, and I'll get into a little bit more later in the video when I go over the pair charts as to what I personally think is going to happen. But just looking at technical analysis, straight looking at gold versus the dollar, this is what I'm seeing. So next, I want to drop into silver really quickly before I hop into the relative charts. And you could see silver kind of same thing. Silver needs gold to move higher before it goes higher. Um, in a commodity super cycle bull market, silver will eventually lead gold. Um, but we need gold to start making new highs and higher lows for that to happen. And there's a lot of tricky games and manipulation stuff going on with silver, which is to be expected, um, because there is a lot of action taken right now to take this price lower. But one thing do want to point out that I'm seeing on this price chart, look at the 4 hour here. If we zoom back to that first liquidation event after we hit the highs of 120, we made an inverse head and shoulders here. This is a blank chart, but I have some stuff here. Watch, check this out, guys. Oh, that chart is a little. So yeah, so this level right here, $70 is really important. We came down, we dropped down to that. We formed the shoulder, head. So left shoulder, head, right shoulder here. And you can see after that, we made a lower high. So you can see the pattern here in the RSI, the relative strength index, was a lower low, then a higher low. So a lower low on that left shoulder, a higher low on the RSI on that head, and then the right shoulder had a higher low. So I'm seeing something similar happening right now, actually, as we are dropping below 70, where we got that lower low on the RSI, where price initially dropped below 70 to 65, which would be the left shoulder. Then the head is is this low right here where we actually dropped as low as 61. So we made new lows on silver last week at open. But you can see here that if you look at the RSI, they actually made a higher low. So that means that there's exhaustion from the sellers. And then we tried testing coming back down. Um, this right shoulder over here, in which we're making another higher low on the RSI. So that's key to keep in mind. Um, to see a validation of this pattern would be a breakout above the neckline. The neckline is the top of the inverse head and shoulders pattern, which would be a break of 70, roughly 75. So some key levels to keep in mind for next week. I'm definitely watching these levels. I'm a big silver guy. I think long term silver is going to come back. And something interesting just this week alone that I'm noticing now, because I'm getting this video out later than I usually would. But if you want to check this out really quickly, we actually got down lower on the open today on Sunday, 6 p.m. Eastern Standard Time, and now we're actually coming up. So now we're actually in the green. So might be some exhaustion from the sellers. Definitely need to watch these a couple things, but let's get into these relative charts. Let's see where the relative edge is. So I'll start with the Dow Gold ratio. Dow Gold ratio really critical here. Really critical to understand the Dow Gold ratio. This is the Dow versus gold. And we're in a macro downtrend in the Dow Gold ratio. Like if I just were to zoom out, right now we're in a downtrend. This is a 3 month chart, meaning each one of these bars is three months. I'm going to zoom in a little bit closer to get a better eye of what's going on. So we're in this downward channel, meaning that we're making lower highs and lower lows. So prices, that means that gold is outperforming the Dow, or the Dow Jones is underperforming gold. And we came up last week and we tested the top of, not only did we test the breakout, which was a previous low, another bounce, and then we broke through, but we came back and tested that same level, the 11.15, which is a critical level on the Dow Gold ratio, guys. Critical level on the Dow Gold ratio. And so we're still in this downward channel, which is good, which means that the play for gold is still on. So I want to zoom in here and take a look that we are coming down and finding resistance here. And I think that we will come down and test this 9 level. So something to keep in mind for this week coming ahead. And this would be an inverse cup and handle pattern. Next up would be the gold silver ratio. Key ratio here, as I spoke about in the past week, 65 on the gold silver ratio is a really important level. We see some strong price movements on the downside and the upside when we cross through these levels. And just keep in mind for when the gold silver ratio is in an upward channel or incline, it's going up. That means that gold is outperforming silver. So, as you guys know, silver lags gold. So that means if gold is outperforming silver, that means that the commodities space is typically in a downtrend. So if we are seeing gold right now go up versus silver, that means that both metals are selling off and vice versa. Decline in the gold silver ratio, that means that we're in a commodities bull cycle in which silver is outperforming gold. So once you have a deep understanding of that, you can kind of get a good reading of the gold silver ratio and how that affects the price here. So you can see that we're in a bullish channel um, after we broke below that 65, but we're forming a bullish channel underneath this resistance of 65. So this is actually a bear flag, and a bear flag means that a downward move is a higher probability than an upward move. So a bear flag is a down move followed by sideways consolidation. So we're in this upward channel, right? So we're at the bottom of the channel. We go to the upside of the channel, then we push to the downside of the channel. Then we tried moving to the upside of the channel last week, but we got bullied down resistance by the 65 level. And look at this. We actually closed how many days? 4 days closed outside of this channel. We tried actually closing outside of this channel once here before, but eventually moved higher. But now we're finding some resistance at 65. So I want to see if we continue to get rejected here. If we do drop down, the next level is the 55 gold to silver ratio, and then eventually new lows past 43. So some stuff to keep in mind this week for that. Silver, SILJ, silver miners. As you know, before we were trading in this upward channel. This is a daily chart, by the way. We broke out of the upward channel, so that means silver is outperforming silver miners. That means silver is selling off. Silver miners are selling off more. Um, and then we broke down, showing that silver miners were starting to outperform silver. We were in this megaphone pattern right here that ended up lasting much longer than I anticipated. We broke through into this upward channel that we were previously trading in before, but we could not close consistently within this channel. We could see last week that we broke below and consolidated 1, 2, 3, 4 days. Like we even opened inside the channel and closed below 5, and then this candle hasn't completed yet because this is tomorrow's candle. But it's important to know that, like, hey, look, if you look at this RSI, we're declining volume, declining strength. So I want to see what happens this week. It's very critical to watch this ratio because if silver miners are outperforming silver, that means silver is in an uptrend. If silver is outperforming gold, that means both of them are uptrend because silver follows gold. And then the Dow gold ratio, if gold is outperforming the Dow, that means all of the gold and commodities typically are outperforming the Dow Jones Industrial Average, and stocks are likely to be selling off as they're inversely correlated. Now, I do want to mention this big time. As I mentioned earlier in the video, this is the MMRI. I want to give credit where credit is due. This is Gregory Mannarino's creation. Basically, he takes the 10-year yield, the interest rates, overnight lending rate from banks, and he multiplies that by the dollar. because as both of these things go up, they add more risk to the market. And he divides it by 1.61, which is a beautiful golden ratio. And I want to do some technical analysis on that. And so I was taking a look at this, and I noticed that we consistently have been trading in a range here. So, and forgive my charts here, but just look at this. So, um, if you look down into the bottom pane, right, I'm going to make it this a little bit bigger just so you can get a better idea of what I'm talking about. We're trading in this trading range, right? So, guys, as you guys can see, let me move to the daily chart and get a better idea of what I'm saying. So, since 20, this goes back to 2021, but every time we get to the top of this range, we get some downward, some resistance. Right here, we can see there's resistance. Um, so we get to, September 2022, October 2023, January 2025, and now we're right at that same resistance here, um, March 2026. And every time we've got here, we form the top, you know, form the top here, we form the top here, form the top here, form the top here. And as these things come down, these add additional, basically is risk on, because as interest rates go up, every money becomes more expensive to borrow. And as the dollar goes up, our currency is strengthened, and other countries have a harder time buying U.S. assets. So, but as the dollar goes down, usually stock markets go up, gold and silver go up. So, if we go any higher here, this could be a significant problem for these markets. We could see some type of credit collapse if we make continuous closes on the daily chart above this. And I'm just going to open up this pane here so you can kind of see what I'm saying. But excuse me, we actually got above this a little bit last week. I expect this to come down. If we do go higher, we will sell off in the market. It is going to happen. If we come lower, then we should see a massive relief bounce. But every time we get here, every one of these arrows shows that the Fed steps in, starts buying, starts buying um, U.S. bonds, U.S. debt. So just a couple things to keep in mind for this week. Definitely watch this MMRI. If you don't have this, you can multiply the 10-year yield by, you can copy and paste what I have here. You can multiply the 10-year yield by the dollar and then divide it by 1.61. But yeah, that's what I got for you guys this week. Just a little short video because I'm traveling, and hopefully you gain some good insight from this, and hopefully you can use this to your advantage. But any dips in this market relative to commodities, specifically gold and silver, should be bought. In my opinion, not financial advice, obviously, but I will be buying if the price goes any further. And I did buy last week as well. So things to keep in mind for this week. Really important, but I hope everyone enjoyed the relative edge and has a good week this week. So it was great talking with you guys. And if you can show some support and like, follow, and subscribe, and even drop a comment if there's something that you didn't understand about the video. I'm always trying to improve. I'm always trying to up my game and provide more value to you guys. So if there's anything that you guys had questions with, feel free to reach out. Let me know, and I'm here for you. But this is the Relative Edge. We'll catch you next week. Everyone, see you later. Goodbye.